this turf war to figure out how digital assets are going to be policed. Yeah. It does not feel to me like much progress has been made on that front. It's crazy how long this has taken to figure out.
Yeah, I mean, it's taken a bit longer than I would hope. We've talked about this on several occasions over the past couple of years. And I think members in Congress are trying to figure out the landscape. We have a lot of regulators in the U.S., both on the market side and the banking side. But ultimately, I've said this for a while, there is a gap in regulation, and Congress is going to have to step in and really overcome this feeling of not wanting to legitimize the technology and seeing this as not something that's tenable or sustainable. I think
it's here.
It's here. It hasn't gone away, and we're seeing it with the price of some of the bigger coins. And there are issues around regulation in terms of customer fraud and manipulation, but then some of this illicit activity and terrorist organization use, I think, should be really concerning for members of Congress and all of us as Americans, quite frankly.
I mean, that seems like an easy bipartisan fix, but just knowing how politics works, you're probably not likely to get a clean bipartisan issue with that without weighing into the areas where there is a bunch of argument back and forth.
I kind of view this as like a three-legged stool. You have the AML KYC issues, which is really around the illicit activity and the terrorist financing. You have the stablecoin issues, which I'm sure Circle and Jeremy were speaking to you about. And then you have the market structure issues, which is very important to me as a market regulator. And I think a lot of momentum has been around the AML KYC because of some of this information.
Wait, back that up. Around the what?
The anti-money laundering and know your customer.
Thank you. Okay.
And that really goes to the heart of some of the issues that we've elevated at the CFTC around Binance and things that they were doing. But a lot of members are very focused on that. I'm very focused on markets. Right. There's a lot of focus on stablecoin.
What do you see as the distinction between the way you think about crypto and the way Gary Gensler thinks about crypto?
Well, we have the products trading on our markets, and I think really, and we've talked about this in the past, it's a matter of what is the investor, what is the buyer of the tokens getting with its purchase of a token, whether it's Bitcoin, ETH, or anything else. And, I've said this very clearly. I've said it many times. I stick to what we have as the legal precedent and what we're seeing on our markets. And, under existing law, many of the tokens constitute commodities. And under this rubric, there is a gap in regulation, and I need Congress to step in. And the fact of the matter is, we've literally been talking about this for years, and we still don't have a regulated environment or a regulated entity.
It's crazy.
But like when you guys get in a room together, is it like a brawl, or is it like we completely agree and we're totally simpatico and it's all cool?
Look, I'll use this stage to just dispel any of that rumor or any of that myth. We get along quite well. We have shared values and shared interests in protecting markets, protecting the U.S. financial ecosystem, and then ultimately protecting customers. It really is figuring out how existing decades-old law fits within this new technology that seems to be changing and ultimately needs a new way of thinking around policy and legislation.
But you guys aren't.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And now we have the CFTC chairman talking about regulation that's coming. All of a sudden doesn't understand what's taking it so long. The technology is here. Not only is it here, it's here to stay and it's not going anywhere. And they bring up KYC, know your customer. Guys, we know that's all about taking away our privacy. And we know with this digital economy, this digital transformation, blockchain gives the NWO the all-seeing eye. They'll be able to know you better than you know yourself. And then we have Jeremy from Circle, USDC, also saying that digital commodities are here to stay. Guys, we know everything is going to be tokenized and put on blockchain, including gold, oil, copper. And we have Rand Paul stating that the United States dollar is in trouble. And guys, we know this was all planned a long time ago. But the final nail in the coffin were these trillions and trillions of dollars that was printed over the last few years. And we know the Fed right now is fighting the inflation that they caused. And we know the inflation that we still have that's sticky is all by corporate greed. But we know the NWO caused the problem, wait for the reaction, and run in with the solution. While we're having all these layoffs, the robots are going to come in And the solution is universal basic income, that free money airdrop. But little do the people know, they're going to be told what, where, and when and how to buy, and they have 3 to 6 months to spend it or poof, it's gone. The United States dollar is going to lose its world reserve currency, and China, the dragon, is going to rise with that digital yuan backed by that digital SDR. And remember, the crypto teacher told you. And we have Pompliano on Bitcoin. Says the bull market has started. And does the crypto teacher agree? No, I do not. This bull market is going to be different. Yes, it's going to be a utility run, but it's going to be a bull market and hyper deflation, and something we've never been through in our lifetime. And remember, we're going to a level playing field. All these currencies are going to be devalued. We know China has been doing it for forever. And remember, the crypto teacher told you. And then Pump redeems herself on this CNBC interview, talks about Jamie Dimon. Look at what Jamie Dimon and JP Morgan are doing and not what they're saying. Because we know they already have their own blockchain, moving their own stable coin. So they understand the power of this technology, and we know they're building Federal Reserve 2.0 on blockchain. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
Digital commodities are here to stay. And that's just, we have this new thing, digital commodities, they're here to stay. And they will be valued differently. Gold is differently valued than oil, is differently valued than copper, right? So there will be these digital commodities. Bitcoin specifically is the sort of largest digital commodity asset. Right. And I think in the minds of many of the people who are investing in it, this is a risk hedge asset. Mm-hmm. It can be correlated to availability of money supply, but it also can be uncorrelated. So it doesn't fit every box clearly. And I think you're hearing from sovereigns, from the Ray Dalios of the world, the Larry Finks of the world, others, that they believe that in a complex geopolitical environment, a complex macroeconomic environment, this is an asset that one should have some exposure.
But we should not think of it as a currency.
I certainly
by the way,
you're
more in the currency camp in terms of what you do.
Correct, yes. So digital dollars that can be a strong store of value medium of exchange that have all the powers of the internet. That's what dollar stablecoins do. Huge innovation. I expect to be explosive in terms of its growth in the coming years. Just a huge utility for dollars on the internet, huge appetite for dollars on the internet. That's a very big thing. And that's distinct from people who want a currency hedge, so to speak, or a store of value hedge against the world going to hell.
The bigger threat is to the dollar and to our currency. I follow Jim Grant. I think he's one of the smartest guys out there, looking at the economy and the Fed. He thinks we're due for interest rates, high interest rates for a long period of time, but we're accumulating debt at $1 trillion every 3 months now. This is an extraordinary thing, and interest rates are now becoming the highest or one of the largest items in our budget. People can talk about wanting to help other countries. We don't have the money. It has to be printed up. It's destroying our currency. And it's why it costs more to go to the grocery store to buy your groceries. There is a possibility we could go too far with this, and we could have a cataclysmic economic downturn, recession, depression, destruction of the currency.
Our currency, the dollar, Jim?
Well, the currency has been on a long slide with respect to its purchasing power, for example, in gold bullion. That is a design feature. It's not so much a fluke. The Federal Reserve is targeting a loss of purchasing power on the order of 2% a year. So we live in an age of inflation. The question about the dollar is, what is the next best thing? And compared to the competition, the dollar looks pretty good on the international stage. It does not look so good with respect to purchasing power at home, nor with respect to the long-term decline in gold value.
Look, Bitcoin's bull market has begun. And when you look at these market cycles, historically they've been kind of 4-year market cycles in between these Bitcoin halvings. And so usually what will end up happening is you'll get about 2.5 to 3 years from the bottom of the last bear market to the top of the next bull market. And then you'll get about a year and a half market correction. And so historically that has been hundreds of percent up, and then you get about an 80% drawdown. Now, the next bull market and bear market, I don't know if it's hundreds of percent or tens of percent. I don't know if the drawdown is 30% or 80%, but definitely it is a very strong indicator that we now have bottomed out of the last bear market. The bull market has begun. And the question now on everyone's mind is, how high will Bitcoin go? I think it's very similar to kind of the traditional financial markets, right? The further that you push out on the risk curve, the higher the potential reward. You've got to get paid for the risk that you're taking. And so what we've seen with Bitcoin and other cryptocurrencies is the market tends to move kind of on a macro basis. And so when Bitcoin goes up, other assets will go up as well. In bull markets, that tends to mean that many of the altcoins will outperform Bitcoin for short periods of time. But the question in the upside case is, what is the durability? Right? Many of these assets might outperform for 3 months, 6 months, even 12 months, but many of them then disappear over the long run. So Bitcoin has been that thing that remains resilient kind of over time. Now, the opposite is true when it comes to the drawdowns or the bear markets, right? Many times Bitcoin will actually draw down less than these altcoins. And so really all you're seeing is Bitcoin is serving kind of, the equivalent of maybe the S&P serves in the traditional market. Bitcoin is that for the crypto market. And so these other assets will trade with more volatility or kind of more severity to the moves. And so you got to ask yourself, who are you, right? Do you want to be a trader? Are you looking for the highest risk possible? Or are you simply looking for a solid return and a resilient asset that you can buy over time and hold for decades? And I think, the way I've looked at it is when I talk to people on Wall Street, Bitcoin is the riskiest asset that they have in their portfolio. They can't believe that they've even allocated, some small percent, 0.5%, 1%, 2%. When I talk to people in the crypto world, they think of Bitcoin as the least risky asset in their portfolio. And so I've forever said that's actually where I want to be. I want to have the asset that the conservative people think is risky, and I want to have the same asset be what the risky people think is conservative. And so that middle ground, I think, is really where a lot of people end up.
Speaking on Capitol Hill, JP Morgan CEO Jamie Dimon said that if he was in the government, he would shut down crypto. What was your reaction to that?
Jamie Dimon is probably one of the best bank CEOs in history. He's built an amazing business. I don't think anyone who understands, kind of banking and finance can look at it and say that Jamie Dimon doesn't know what he's talking about. On this specific topic, though, I think that there is a little bit of what is being said, and then if you look at the actions of the bank, there's different actions, right? And so, one, when you're in these hearings, obviously you're speaking to a certain audience. And when you're speaking to politicians, when you're speaking in front of the national media, there are expectations of the leadership of large financial organizations or large banks. And I think Jamie was probably addressing some of the questions from that perspective. But the bank has a blockchain team. They have hundreds of people that are working there. They forever have been building out things like stable coins, etc. On top of that, I think that there is kind of a tale of two tapes, because you also have large financial organizations like BlackRock, where Larry Fink is going on national television and he's saying, look, when people are buying Bitcoin, it's a flight to quality. And so really, I think you got to ask yourself, well, what's the incentive here? And if you were to ask kind of people across Wall Street, who is most likely to lose market share or lose out something if these assets and these technologies become viable, it's the banks, right? It's not the asset managers. The asset managers are pretty nimble. They're able to say, okay, I can create an ETF for stocks. I can create an ETF for Bitcoin. I just simply switch out the underlying asset and it's the same ETF wrapper. I can raise private funds and allocate capital. And so I can go ahead and adapt to change much more easily than, let's say, a bank where part of my business model is based on transaction fees or other types of kind of revenue streams that directly compete now with this new technology that appears to be much more advantageous. And so, look, you can put a lot of weight on the words that are said in these hearings, or you can put no weight on. I tend to not really pay attention to what any one person is saying in the hearings. I really just go and look at their organizations and what are the actions they're taking. And so my guess is that it was well received by the audience he was speaking to. At the same time, there's a lot of people who went to work today at JP Morgan. They're going to go work on blockchain technology. And so just understand the difference between those two things is important.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Cryptoteacher and the New World Order book, plus the 3 Kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.